Home Depot, the world's largest home improvement retailer, updated investors with their quarterly earnings results on August 13th. The company is experiencing decreasing sales as consumers are fed up with spending more money on their homes. But is the stock a buy at current valuations? That's the question I'm going to answer in this video after reviewing the company's latest financial results. So let's take a look at the numbers. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Home Depot reported sales of $43.2 billion in the second quarter of fiscal year 2024. That was an increase of 0.6% from the same time last year. However, the sales included $1.3 billion from the recent acquisition of SRS Distribution, which represented approximately 6 weeks of sales in the quarter. If you just looked at comparable store sales, meaning Home Depot's existing sales from locations that were open at the same time last year, total sales were actually down 3.3%. Operating income for the second quarter came in at $6.5 billion and operating margin was 15.1%. That's down from operating income of $6.6 billion in the same quarter last year with an operating margin of 15.4%. Sales are coming down for Home Depot following the early stages of the pandemic when home improvement was a surprising category where people spent a lot of time and money on. People were spending more time at home, and so they wanted to upgrade their home, painting areas, finding new ways to upgrade their houses, maybe adding a home office, maybe adding an outdoor space, and that created a surge in home improvement spending in 2020 and in 2021 and in some parts of 2022. But when the economic reopening gained momentum, consumers started spending more money on things other than their home. And since they recently upgraded their home, things like painting your home, you only do once every several years. And so you're not going to need to do that again. If you added a new outdoor space, you're not going to need to do that again. And so that's creating a bit of a gap in home improvement spending. The CEO saying that the underlying long-term fundamentals supporting home improvement demand are strong. During the quarter, higher interest rates and greater macroeconomic uncertainty pressured consumer demand more broadly, resulting in weaker spend across home improvement projects. The home improvement CEO of Home Depot has often said that one of the main reasons people spend money on their home is when they notice home values are rising or when people expect their home values to continue rising. That makes them feel like the money they spend on their home is an investment instead of an expense. But given how elevated home prices are and how elevated home prices have been, I don't think people are expecting home values to rise much further from here. In fact, I think people would be surprised if home values do not fall from these levels. From 2019 till the late summer, home values are up roughly 50% across the United States. That's a huge surge in home values, which were already expensive to begin with in 2019. Home affordability levels are unsustainably high, which creates a question, who's going to buy these homes at these levels, especially as interest rates are significantly elevated? At the same time, you have people who refinanced their homes in 2020 and 2021 at record low interest rates, and they don't want to sell their home because if they sell their home now and buy another home, they're going to need to get a different mortgage at now higher interest rates. So the home improvement and the home sales industry are in a bit of a fluctuating period given the unprecedented changes during the pandemic. And right now, Home Depot is experiencing the downside of those events. Before the company updated investors with their latest quarterly results, I've had Home Depot rated as a top stock to buy all year long in 2024, and I last updated that recommendation on July 3rd. I thought it was a top 25 stock to buy and a top 10 dividend stock to buy, because even though in the near term Home Depot is facing headwinds, longer term, the company operates an excellent business. It's in a massive $1 trillion industry, and people always need to fix their homes. You live in your home, you need to maintain your home, things break, you need to fix it, and home improvement is one category where the online players have a hard time penetrating because the type of things you need for your home it's not easy to shop online for. For instance, let's say you need to buy some plywood and you're adding a room, right? You can't really buy that online. It's so heavy and bulky, it's hard to deliver. Furthermore, let's say something breaks in your house and you need to fix it, something urgent. You're not going to wait for next day delivery or 2-day delivery. You'd prefer just to drive down to Home Depot and get the items you need to fix whatever it is that you need fixed urgently. And so the home improvement industry has held its own even in the age of people spending more money online. The home improvement industry and the home improvement brick and mortar stores are one of the very few retailers that have been able to keep customers coming back to existing brick and mortar locations. The other one has been Costco. But Home Depot has done a phenomenal job at this, even as people spend more money online. And that's part of the reason why I've held Home Depot stock as a top stock to buy. Given these results, the company is updating their 2024 guidance to reflect the updated outlook. They now expect total sales to increase at 3% at the midpoint and comparable sales to decline by 3.5%, with the operating profit margin falling to 13.5%. Those are down from the previous outlook where the company said total sales would grow by approximately 1%. This is before accounting for the acquisition, and comparable sales to decline by only 1%, and operating margin of 14.1%. So comparable store sales were expected to decline by 1%, and they now expect it to decline by 3.5%, so much worse than initially expected. Operating profit margin 13.5% is much worse than the 14.1% they were expecting just 90 days ago. So expectations are worse now that the company has experienced another 3 months of performance. Total customer transactions decreased by 1.8% in the most recent quarter, which ended July 28, and consumers spent less every time they visited, 1.3% less. So not only are customers visiting Home Depot less often, when they do visit Home Depot, they're also spending less. And so that double-sided downside for Home Depot is not working well for the company. Still, following the earnings release, the stock price did not fall. In fact, it was up slightly on the day. Home Depot stock is now trading at $350 per share, which is roughly flat from where it started the year, even though it's had a volatile up and down year. Home Depot is now trading at a forward price to earnings of 21.8, which is roughly where this stock has traded for according to this valuation metric, going all the way back to January of 2022. It's been higher at moments and it's been lower at moments. So the stock is not cheap, but it's also not expensive. However, it is an excellent business. It's an excellent business with excellent long-term prospects, given the competitive advantages Home Depot boasts in the home improvement industry. So these near-term headwinds, I think, are an opportunity for long-term investors to accumulate shares in Home Depot stock. So I'm reiterating my recommendation, signaling that Home Depot is still one of my favorite stocks to buy right now. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.